What's up, guys? It's Migs from Market Open. I want to do a market recap for today. It's been kind of slow lately. The whole Santa Claus rally thing did not really quite happen. And by Santa Claus rally, I mean the end of December. Usually the market likes to rally, but it didn't do that this year. Believe we're at basically all-time highs. So there's really not much room for the market to go up a little bit higher. I want to start off by breaking down the SPY. So the S&P 500 is basically the top 500 stocks in the market. Usually it gaps up or down every single day. And little side note, usually it closes the gap during most days. So what I mean by that is that if the market gaps up, it usually closes the gap from the previous day. So if the stock closed right here, or if the SPY closed at 267.86, most likely if it gaps up, it's going to come down, close the gap, and then it's either going to bounce back, come back up, or it's going to keep heading lower. So the other day, I usually mark the previous day's close. So I noticed that the other day, the market didn't really quite close the gap. So we still had a little bit of a gap, because 80–90% of gaps in the market close. So I knew that there was a little bit of room that needed to be filled right within here. So if I was actually expecting to have a down day today, Friday, which is the very last trading day of 2017, so then we were gapping up significantly. I figured we would just sell off, close the gap, and we were actually going to head even lower and close the gap from the previous day. So with that in mind, I was automatically looking for shorts. Now, the first trade that I took was on WATT. Now that I say that, I was looking for shorts, but unfortunately, the very first trade I took was a long, I believe. So I took WATT at 29.07. Let's see here. I believe I took it on the 1 minute, 9:36. Yep. So right around here. Yep. Okay, so I was waiting for it to break down under the whole number, under 29. Honestly, my entry should have been the break of, or the next candle to make a new low, which would be right here around the 29.30 area, and my stop should have been the $30 mark. If I would have done that, I would have been safe even on the spike right here. So, but my entry actually ended up being 29.07. I was anticipating it to break down the whole number. As you can see, the low of this is actually right at 29. So if you see in the corner it says L29, so that means the lowest that this candle went was 29. So I anticipated it. I hit the button right at 29.07. It actually ended up bouncing at the whole number, which it does a lot, unfortunately, and actually ended up coming back up. My stop was actually going to be the high of this candle, which was 29.60. As you can see here, right here in this candle, it actually spiked up very fast, and it ended up kicking me out. I've been working on not having hard stops. So it actually ended up kicking me out. I got out at 29.70. Actually, no, during that candle, it actually didn't spike up really fast up to 29.70. It hit 29.70 or so, like it was slowly climbing, and then it just flashed up really high, flushed a bunch of people out. As you can see, that was a shakeout. And by shakeout, I mean the market makers moved the price of the stock high to kick out all the shorts, and then they crashed the stock. As you can see here in this candle, it flashed, and then it came straight down, came back. So in this candle right here, I probably would have gotten out. I would have covered my short, but since I got kicked out right here, I completely missed the move. There's really nothing I could have done about that. There were some guys in the room that held, but to me, holding for an extra 30–40 cents, or actually it was like an extra 30 cents, it's not really part of the plan. So it climbed up to my stop slowly, so I got out, and then it flashed up, and then it crashed. Unfortunately, it's just a luck of the draw. It happens. So I actually ended up losing $120 on that one. All right, the next trade I took was on ADNT. I don't short stocks if they're above the 9 moving average, and if they're not, if they're above VWAP, because both the 9 and VWAP provide support for the stock. So it's a very commonly used moving average that professionals use to be able to either gauge the risk or kind of see which way the stock is trending. So what they use it for is for support, as well as VWAP, which is this white line right here. VWAP is the volume weighted average price, which is basically the median price of the stock. So I was waiting for it to break down below the 9, so I shorted it right here at 1950, and I waited for it to break below. I was trying to get it at 1920 with the stop right here at 1956, 1957 or so. So I ended up shorting it right here, got it at 1915, and then a couple minutes later I actually ended up doubling up. So what I did is I bought another 125 shares, giving me a total of 375, and I ended up putting my stop right here at 1920. Now, as you can see here in this candle, it quickly flashed up to or past 1920, but it came back down. So that's one thing that I've been working on is not having hard stops and making the call as needed. So I saw that it moved up very fast, but it didn't really quite stay. So that would be a shakeout. So that's basically market makers trying to get you out of the stock so then they can crash the price again. But I've noticed this is, it didn't actually crash right after, so most likely wasn't a shakeout. It could have just been a fat finger or something, somebody just buying a little bit high. But either way, it moved up past my stop, but I stayed and I noticed that the next candle was not very bullish. So I just stuck to it, and it kind of kept going back and forth between 1910, 19, and it didn't want to crash. So as you can see on here, I actually ended up covering the short. I ended up covering, let's see here. Actually, I did add to it. I ended up covering right at 1910. I ended up losing $12.50, but I wasn't liking the price action. So I was looking at the level 2 and just seeing the fight between the sellers and the buyers, and I just didn't really quite like what I was seeing. Although there were, at one point, there were more sellers, so I kind of stuck around for a little bit. It's just I didn't really quite like what was going on. The market was starting to move a little bit higher, so I decided to get out of the stock. As you can see, I made the right decision because it actually ended up rebounding and hit all the way up here to 1945. So I believe I got out somewhere around here, so 11:07. So I actually ended up getting out right here in this candle, making the right move. 20 minutes later, actually it ended up spiking up. So I was right. The market was actually turning around and coming back. So no big deal. I mean, I could have lost a lot more. I could have lost over $100, but I actually only ended up losing $12. Now, the next trade I took was on SIG. This was actually called out by somebody in the chat room. As you can see, there wasn't really much of a gap. It just happened to be very strong. So like I was saying earlier, the market was very, very weak, so I was very hesitant on taking a long. So I didn't really quite stick around very much. So this is a perfect technical formation right here over 58. So any other day when the market is not weak, this would be a perfect long. So this would be something to take over the whole $1.58 and just put a stop right here at 57.60. But as you can see here, it went up and over and it just came back down. So it didn't really quite trust it. As you can see, there's a lot of ups and then it just sells off. So that means that there's a lot of resistance at that level. So with these long wicks right here, they mean that there's sellers sitting up there that currently have the stock and they want to sell it somewhere around 58.15, 58.20. So that's what happens. The buyers push it up and then the sellers push the stock back down. So that's why it's very important to know how to read candlesticks. So as you can see, these candlesticks have long wicks up at the top, meaning there's a lot of pressure up there. So I decided to get out of the stock right at 58.08. Made $3.50. I just wasn't really quite comfortable with the price action that was going on as well. As I mentioned, the market was also kind of weak during that time, so I wasn't very comfortable taking it long and sticking around for a while. So if it didn't work right away, I was just going to be out of it. So I actually ended up doubling up on SIG, knowing that I was going to be out very fast if it didn't go my way right away. I ended up getting out right at 10:48. Let's see here, so somewhere right here. So right in this candle right here. Ended up making $3.50. No big deal. Whatever. Now, right after that, I noticed that the NASDAQ. So the NASDAQ is the top 100 stocks in the market. So the SPY is the top 500 stocks in the market. The NASDAQ is top 100. So professional traders look at the S&P 500, which is the overall most of the stocks in the market. It's the top 500, but it also includes a lot of other stocks, and the traders use that as a sentiment to be able to know which way the market's moving, whether it's going up, it's going down, if they should be long on something or short. So I noticed during that time that, here, I'll pull it up. So the ticker for the NASDAQ is QQQ. It was right around this time, actually. So let me back it up. So as you can see, right around this time that the NASDAQ started crashing, and it just started selling off. Don't really know why. I mean, honestly, it's irrelevant. As you can see, this candle right here at 10:50, and a candle at 10:50 right here. So basically, during this time, the NASDAQ is mostly made up of the really big companies like Apple. So Apple actually makes up a lot of the NASDAQ because it's such a large market cap that whatever Apple does or whatever the NASDAQ does, Apple does. So if you're trading futures and you're trading the NASDAQ 100, basically what you're doing is you're buying shares of Apple. Like Apple makes up so much of the NASDAQ that they just mirror each other. So if you see the NASDAQ go down, you'll also notice that Apple goes down. Now, with knowing that, I did do something that I usually don't do. I usually don't like shorting Apple because it's such a large cap stock that everybody just loves, and anytime that it's at a low price, everybody will just try and scoop it up for a good price. There's just investors, just what they like to do, just going long on Apple. It's a normal thing to do. So anytime that that it sells off, you can count on people just coming up and scooping up the shares for a lower price. So regardless, we noticed that the NASDAQ was selling off, and what I ended up doing is I noticed that it was Apple right here. So Apple was coming up and hitting VWAP, and it started coming back down. During that time, the NASDAQ actually started crashing. So I went short Apple, 300 shares right at 1957, 1967. And I got, let's see here, I covered, like 15 minutes later? Oh, right there. So 169.87, that's what it was. Somewhere up here. Oh, that's right. Actually, no, I ended up missing my entry right here at 170.10. So right around here. I noticed that it was coming back, and it got rejected. It got held up right at VWAP. So knowing that my stop was right here at 170.30, I actually shorted it a little bit higher, which is something that I usually don't do because you don't want to short something that's going up. A lot of the times you don't know how far that stock is going to be going up, but I did notice that the NASDAQ and the market have been very, very weak that day, and right at that time the NASDAQ was crashing. So I was very comfortable shorting at a higher price, knowing that my cutoff was right at 170.31. So if it came up any higher than that, I would gladly get out. But so it went up. I got I shorted right at 169.87, so it was relatively small if I was to lose, so I wouldn't really be losing much. And right during that time, it just started coming down. So I timed it just right, and I was able to get $80 out of it in less than. Let's see here. So shorted it right at 10.51. Yeah, so I got out right at 10.59. So less than 10 minutes and made 80 bucks. Now, and let's see here. And the last thing I did was, yeah, that's right. The ADN or ADTN actually ended up covering the last 500 shares because it wasn't really going anywhere and the market was starting to rebound. Yeah, so I ended up making a little bit over $160 for today. Like I said, the market's been very slow lately. So I'm just been trying to keep cool, just hold off until the new year, and just try to stay green. I just wanted to give you guys some inside information on what I'm thinking, what my thought process is, what I'm basing my risk off of, what certain things are, what I'm looking at, when I'm going long or short on some of these stocks. If you guys have any questions, make sure to leave them down in the comments section below. Make sure to give this video a thumbs up if it did help you. Also, make sure to subscribe and click the little bell button to keep updated on next time I put out some content. Also, make sure to check out our free Facebook group. I put the link down below. It's just a place to share your ideas with other like-minded individuals. Whether you're an investor, a swing trader, a day trader, you're trading cryptocurrencies, it doesn't really matter. All right, guys, I'll see you next time.